Alright, so in this video, I'm going to be going over entries, even though I go over entries quite often. But this is going to be specifically entering the market. So, I always go by this saying, pips, percentages, and money. What exactly does that mean? So me personally, I found out that with trading over time, intraday trading wasn't really something I like to do very much because it was a really emotional game, meaning that I was always buying and selling, and there'd be times when I'm taking 5, 6, 7, 8 trades in a day. So I found out that that's not how my consistency, how I work on the charts. You have to find out what type of trader you are. Like I said before, I'm here, I'm just giving you a platform on learning how to trade. I have different styles, of course, like I said before. If you're a swing trader, if you're trading off of H1, but me personally, I found out that medium swing trading for me works best because it's most profitable in my situation. Now, I'm going to give you live examples of me actually going over trades I took with my account balance. So, normally I don't like sharing account balances, especially in what happened to Q Banks. Um, it's just sad, that there's people that are that envious out there that would really hack someone else's hard work, years of hard work, and just completely, take all the money or blow it. They didn't even take his money, they just straight blew it. So, you know, when I'm analyzing, I always like to do a top-down analysis. Normally, I'm starting off the weekly because the monthly is a little too much for me. But on the monthly, I'm mainly looking at how candlesticks are forming. So as you can see, right here, once this bullish candlestick was able to pass the opening of this bearish candlestick, pretty much told me that there's more buyers. But looking at the moving averages, there's more sellers overall. Then that would push me down to the weekly time frame. The weekly time frame is clearly downtrending. Here we have a high, here we have a lower low, here we have a lower high, here we have a lower low, here we have a lower high. Potential areas. Could we see the market push down all the way back to the 13 or the 1300s, 140? It's definitely possible, but we need a break of this key level here. As you can see with all this seller's exhaustion here in the tested candles in this area, a break would be nice. And if it breaks here, definitely I'm expecting a push down to 140. So now that said, here we have a bearish engulfing candlestick along with another bearish engulfing candlestick. Now, there's still a couple days left in this week, but it's definitely possible. As you can see, I also have my trend line drawn out here. Lower high to lower high. Let me just get rid of some of this stuff here, just randomness. So now that I've analyzed the weekly, it's analyzed daily. Daily, immediately cross moving averages, telling me that there's more sellers inside of the market, right? So that's just helping with my bias. My bias overall is bearish. Now, at this point in time, I was trading around here. So once I saw this cross and this engulfing candlestick, I was pretty much looking at just straight sells, so opportunities. So now let's go to the 4-hour time frame. So pretty much I'm going to be breaking down how I caught these moves. I'm not sure if I'm going to break down this one. I'm just definitely breaking down this one. Okay, so simple. What is this? A previous high. What is this? A lower low. Okay, so that tells me A and B on fibs. Point A, previous lower high. Point B, lower low. So you can see the market did come up to 61.80. When this candle closed tested, I knew that, well, I didn't know. I expected the market to pretty much start reversing, but I kind of expected that it wasn't ready just yet to reverse based off of this exhaustion here with these 3 candlesticks. What does that tell me? Look for an entry. Where do I look for entries? Lower time frames, right? So let's do one of the following. Let's mark off the area of resistance. So overall, here's a median, right? Especially when this candlestick formed, there's the median. Okay, so now let's go to the 30-minute time frame. Before you enter trade, you need to know your risk management. You need to know your potential take profit areas and your stop loss areas. So overall, based off the 4-hour time frame, I was expecting a push downward. So my take profit area was at the -27 extension level, right? As you could see, it was just hit so perfectly, and I got out just so perfectly. Literally the second it touched the -27 is when I closed my order, right? So my take profit area is here. Okay, so I'm gonna leave that up there, right? So now it could be looking a little bit clustered, but overall, okay, so we know we're at 61.80 on fibs, right? So let's do this, right? My entry was actually based off the 5-minute time frame, but I'm gonna keep it simple for you guys to just stick to normally a couple time frames. Now later on you can break it down to lower time frames, but I'm gonna make an example where you could have entered just based off M30. Okay, so here we have resistance, right? So this is where you could have entered, right? Once this area of resistance was rejected and this candlestick closed, bearish variation, right? This is a bearish variation. Once this candlestick closed right there, you could have just hit that sell button, especially that there was very little exhaustion towards the bottom. You know, you could have looked at the 5-minute time frame, right? So that's entry number 1, right? That's how you could have entered there. Okay, now before you enter, you need to know your lot size and your risk management. So pretty much you have to do this very quickly, right? Let's say your entry's here. You have a stop loss of, or well, you know, my example, my stop loss was above these wicks. So my stop loss was only, I believe it was 17 pips I was risking, and I decided to be risky with this trade because I was so confident that it was going to go down and hit my extension level. So I was looking at a stop loss of about 16, 17 pips for a reward of about 227 pips. And as you can see, this is how long the trade actually took. It took a couple of days, I believe. Not too long, but yeah, it took about a day and 17 hours. So the risk to reward is definitely there. A 13-to-1, meaning that I'm risking about 16 pips for a 227 reward. So the risk to reward is there, right? So that's when I decided to risk 5% of my total account balance, you know, on this account specifically, right? So my account at the time was at 2,500. You know, I'm just gonna even it out. It was at about 2,500. So if I'm risking 5% of the account, that's 0.05, right? So I'm looking at a stop loss of about $1,200 where I need to close and get out of that trade. So simple. What lot size can we use with a 17 pip stop loss, only risking $1,200? It's divided by 17.3. That gives us 70. I'm not sure why my recording software stopped recording, but overall, right, so where was it? So 1250 divided by 17, I believe. So yeah, that gives us 73, right? So we can pretty much take this first denominator here, and that will give us a lot size of 7. So if we do 70, because the lot size is $70 per pip, times 17 pips that we're risking, that gives us 1900. So yes, we can use a lot size of 7, and I ended up going with a lot size of 7, and I'm only risking, you know, 5% of my account, right? So I'm looking at a loss of $1,200 for a potential, notice I said potential, reward of about, yeah, I ended up catching 220 pips flat. But as you can see, this was my potential reward. Right now with spreads and commissions, I ended up just making 15 flat, but overall, you know, just gonna keep it to numbers, right? So here was when I made one entry, right? So you can see this entry was pretty much in profit immediately, and it was pretty much one of the best entries possible that I had. How could you have gotten in on a little bit better of an entry based off the lower time frames? Now this is where people can get confused. So normally I tell them stick to, you know, 3 time frames that your overall analysis is going to be on, so you don't have to break it down on lower time frames because it's just more noise, right? But you know, overall you could have gone in based off the 5-minute as well. So you know, once it did reach this area and there was a rejection, you know, with this line here, so as you can see, it could have easily just kept going up, but based off the 30-minute time frame, you know, you want to wait for that confirmation. You know, we had the cross moving averages and everything, and then it's pretty much, as you can see, my entry was pretty nice. So yeah, so that's how I made that entry and ended up catching this move here. Now, how I ended up getting in again. This is the thing with swing trading. Normally, I like to scale in, right? This is why swing trading, or at least medium-term swing trading, you're just 10 times more profitable than trading intraday, because intraday trading, you're taking lots of trades, right? Normally, you know, with swing trading, you're taking 2 trades, but your profit is insane. So we're going to talk about the risk management after that. You know, the risk management of, you know, medium-term swing trading versus intraday swing trading right now after this example here. So pretty much, you know, the market pretty much came up, tested the previous broken support, rejected it. So I was kind of expecting the market to go back down, but I didn't, you know, I missed an opportunity to pretty much re-enter because I did not like the exhaustion on this wick. But after that, you know, this kind of freaked me out here because of volatility. You know, we had a cross moving averages, especially on a more reliable time frame such as the 30-minute. But, you know, we're pretty much maintaining downtrend structure the entire time, and EMAs were still red over blue at that point in time. So pretty much once the market had come down, formed this tested candle, I knew it was just retesting that resistance again. So that's when, you know, I calmed myself down and relaxed. So it came back up yet again, and then that's when I started getting a little bit nervous. But overall, you know, it ended up forming kind of this variation pattern here, and that's when I did decide to enter the market again. Risk to reward. You know, I entered based off of this right here, selling right at the resistance. I only had a stop loss of 13 pips here, but with this trade, since I'm already in profit, you know, I'm using the equity from my first order. So how much was I up again? I believe let's do the math really quick for that. So I was up about 47 pips. So let's check that. So I was up like $3,000. It wasn't like 3,290. So I was up 3K. So the account was a little bit higher. So then I decided to actually put a lot size of 3, just to play it safe. You know, I only wanted to risk $300, and you know, I had my stop loss for this order above this resistance as well. So I take a little loss, but you know, overall, the profit, you know, I had my stop loss for this order at 2K. So then I take a $300 loss, but I take $2,000 profit if it were to break that area of resistance. So now, actually, can I? No, I can't. Okay, so pretty much I entered the market here again on a 3 lot, risking about only 13 pips. I believe I was only risking like maybe like 2 or 1% on the account, but risking about 13 pips here, which is around $300 and maybe $50. And then the same take profit area, same exact take profit area. And then as you can see, a couple hours after this order was hit, I woke up and both my trades were closed. I kind of freaked out for a second, but then I noticed that take profits were hit. So then let's get the calculator. So then for some reason, I don't know why my recording software just cuts off randomly. But like I was saying before, so both take profits were hit. So on the first trade, I ended up making about $15,000 on my first order, plus 25,000, and then on my second order, I ended up, it was nothing crazy, it was like $5,000. So then, so you can see that's my total account balance at the end of the day, and that was with a fresh deposit as well. So then, as you can see, you know, medium-term swing trading benefited me way more than intraday trading. So let's say in intraday trading, you would have caught this move here, which would have been, you know, 100 pips. Now let's say you would have caught that move here, you know, that's 150 pips. So as you can see, you know, for me, I like medium-term swing trading a lot more than just intraday trading, because you probably would have closed that order, tried buying here, you know, maybe took a loss somewhere here and there. But overall, you know, I just like medium-term swing trading. So you can see my account balance was now, well, is now, it's a little bit less than this because I took a loss. So my total account balance, you know, then I withdraw 50% of those profits. So I withdrew 50% of that straight into my bank account and kept 10,000 in the trading account. So that's pretty much how I work my withdrawal system and my risk to reward, my risk management, and that's pretty much just how I trade. So as you can see, after a big trade like this, I pretty much withdraw 50% of the profits and leave 50% in the actual broker account. Now, that's pretty much how I go over entries a little bit. So then, you know, you can have your trading system intact. If you don't have a risk management system, then it's just not going to work. Overall, like I said before, you know, risk management is extremely important. Now, if you watch the risk management video, you should know what you should do for your risk management. And, you know, I just found that medium-term swing trading is just way more profitable for me to actually trade that way instead of intraday trading. You know, it just requires a little more patience, but overall, everyone trades differently. You know, I don't think I could be a day trader, meaning I'm trading every single day. Like I said, I only traded twice this week on this account. On my main account, or no, this is my main account, right? On this account, I only traded twice. On another account, you know, I traded about 4 times, and it's just, you know, I'm just testing different ways of trading so I could stick with one way of trading, which I now found out that this is pretty much the most profitable and beneficial, I guess, system that works with me. So no, I'm not going to be doing any more intraday trading. Mainly just going to be doing medium-term swing trading. So hopefully this video did help you guys out at least a little bit with entries. Definitely contact me if you have any questions. And yeah.